We have a lot of momentum, and what that translates into is much more influence over outcomes. Another way I put it is we used to sit at the kids' table, and now we definitely have a seat at the grown-up table.
IMAX has a unique position at that table, next to both distributors and studios. The bulk of its money comes from two streams. Technology, products, and services refers to the systems IMAX sells, rents, and maintains. Most content solutions revenue consists of its share of global box office. While both streams have gross margins above 50%, growth in ticket sales carries even more upside.
The box office dollars, it doesn't cost us any more as we gain more market share. We've already invested the cost, we've made the film, we've put in the marketing, and so if that box office grows to be 10% or 20% bigger for a particular title, that didn't cost us any money. That actually then falls straight to the bottom line.
More screens equal more shots at these incremental dollars. IMAX is steadily expanding its global network. With 3 models for adding systems, the company can take a strategic approach to growth, mixing traditional sales and joint ventures to achieve maximum returns.
If you're in a market where there are lower per screen averages, you'd rather sell into that market. And as a matter of fact, in China, we've lessened the number of JVs we're doing because PSAs are lower there. And if it's a market like Japan, where there are a lot of opportunities for high-performing theaters, we'd rather joint venture in those markets because the return on investment looks stronger.
Which new IMAX markets have the most growth potential right now?
Japan is one of them. Australia has been another significant market. Middle East, Southeast Asia. We continue in certain parts of Europe as well, like France and Germany. Our rest of world market share is about 2%. And so if you can start to uptick that market share a little bit, that's really where you're going to start to get that incrementality in the model kicking in.
As its footprint broadens, so does the type of content IMAX is putting on screens. Hollywood blockbusters are still its bread and butter, but more and more, local language films are adding a hefty boost to the bottom line.
How do you get to a 1.2 billion, for instance, in a year when the industry globally is declining or growing at a much lesser rate than we are growing? That's how you get there, is you're being agile by opening that content aperture up and including not only Hollywood tentpole releases, but all of these local language releases along with alternative content. There is opportunity to make all of that additive.
We don't only do local language films in the market they're in, we do them in other markets. One pleasant surprise was the appetite for anime in markets outside Japan. We've done local language films in places like Saudi Arabia, which has a much smaller base of screens. And I would say some of our motivation for doing that was to create a cycle in that market where you jump-started a little bit by having local language films.
IMAX has also ramped up development of alternative content, like documentaries, concert films, and live events. And that's an area where the CFO gets directly involved.
Natasha actually plays a leadership role in our alternative content analysis. So for some of the smaller projects, I won't even be involved at all.
I'm involved in the alt content and the documentary discussions and the green light review and modeling and looking at the legal agreements.
How much room do you have to add shows, and how much revenue can that add?
Utilization has been something I've been highly focused on for the past year. It's near and dear to my heart because I know that by increasing utilization, that's immediate incrementality to our model. And we have lots of room. But the piece that I think people miss is that you're bringing in a new consumer, and then they experience IMAX, and then you have a fan. And now you have a new consumer, and therefore you continue to grow your market share.